Our featured guest is Peter Boockvar, equity strategist at Miller Tabak Co. And Peter, let's kick things off with you. I mean, is it really just all about Greece and what goes on with this sovereign debt?
Well, certainly for today it is, and for the last couple of weeks it has been, when there were concerns that they were going to run into major financial problems, which they are, and that's why we got to today. I think what's happening is that the European Union is trying to stave off an acceleration of the uncertainty and panic by floating the idea of possibly giving them some help. But there's no question that the rise in yields, the scrutiny of a highly leveraged country is definitely the focus, as it should be.
Right. So investors are right to be selling when there's concerns that there's going to be some, things are going to kind of come undone, if you will, whether it's in Greece or some of the other countries over there.
Well, raising the cost of capital for countries, that is a risk-free rate for many investments. You raise the risk-free rate, well, then you raise risk premiums across everything else. So it's very important that a lot of these countries get their situation under control, again, because of the ripple effect. And there are plenty of highly leveraged countries out there, particularly the U.S., that is going to gain greater scrutiny. And this is really just a wake-up call. We saw it in the consumer area, we saw it in the company area.
Right.
Now we're seeing the country, and it's scrutiny that is deserved.
Could we see a very long, cold winter when it comes to stock, as Mr. Gordon has kind of laid out here?
Well, if you look at the last long-term bear market from 1964 to 1982, it lasted a long time, and that's how a lot of cycles run, 15 to 20 years of bull markets, 15 to 20 years of trading range secular bear markets. So it is very possible in 10 years from now we still could be talking about Dow 10,000 as we digest the aftermath of what juiced us for the previous 20 years, and that's a huge expansion of credit that led to a massive bubble.
We talk so much about Dow 10,000. We went below it yesterday. We're back above it. I mean, is it a really significant level in your mind, Peter?
No, it's just a headline grabber rather than anything else. It all comes down to the valuation relative to earnings, and that's going to end up driving things. I think there's this assumption that we're in this typical post-World War II recovery where we had a bad recession and we're going to have another 10-year type expansion before the next recession. But I'm of the opinion this is not your typical post-World War II recession because of the amount of debt our country is dealing with. Therefore, earnings growth is going to be subdued, and therefore multiples that you pay for that earnings growth is going to be subdued. So you can throw out the historical P ratios over the past 20 years because I think we're in a new multiple world right now.
A nice gain here, but again, we should expect strong gains, strong losses in this environment.
Well, if a reason for the weakness over the past couple weeks was concerns about Greece, certainly today's news is enough to lift us back up. But it still is only one of, in my opinion, 3 reasons that caused a lot of the selling over the past month. And number 1 was concerns about China slowing down. And number 2, with mixed U.S. data and earnings that didn't meet high expectations. So now maybe Greece, that fire is put out, but we still have to deal with some of the other issues of the Fed unwinding the purchase of mortgage-backed securities, China, a mixed economy.
Not to mention our own deficit, correct? Talk about, sovereign debt concerns. What about our domestic debt concerns?
Absolutely. So Greece, yes, we can cheer it today. Maybe we'll cheer it tomorrow or next week. But there's still a lot of headwinds out there that the market's going to have to deal with in 2010. And a lot of those headwinds were tailwinds in 2009 that just aren't going to be there this year.
Peter, you talked a little bit about earnings. I mean, these earnings numbers overall have actually been coming in fairly well.
Yes, earnings season has been good. It's just the expectations going into this earnings season certainly were much higher than the previous 2 quarters. The economy is trying to heal. Global economies are trying to heal. The question is how much are governments around the world going to screw up the recovery? And if whether it's Greece, Spain, Portugal, China, or even us, they've created a lot of speed bumps into recovery because of all the stimulus they pumped in 2009. Has to be removed in 2010. So it's the private sector of the world economy that is fighting an unwind of a lot of this artificial stimulus that has been injected.
Peter, where do you weigh in when it comes to housing and the jobs? Obviously, last Friday, big story, our jobs report there. An interesting report as we all tried to dissect it. Where do you weigh in terms of how the labor market looks at this point?
I think the labor market, in terms of hiring, is going to be punk for a while, all through this year. I think the business has stabilized in terms of the amount of layoffs has subsided, but the question of going from no more layoffs to hiring, I think, is going to be a longer bridge than people think. I mean, you have to remember, as we go through 2010, if things get better, well, we have Fed unwinding policy, possibly raising rates, and we have huge tax increases in 2011. So from a businessman perspective, do they really want to start ramping up hiring right now with all these uncertainties? So, right. Yes, not getting any worse, but not getting any better. And until you're generating more than 100,000 plus jobs, that unemployment rate still may creep higher as we absorb increases in the labor force.
Peter, what about the administration? Are they taking the right steps, in your view, to create more jobs, provide the right economic environment for the next 6 to 12 months in terms of their policy initiatives?
I have to say, unfortunately, no. I think what they're doing is actually scaring the business community rather than encouraging them.